are struggling to breathe, and this has the capital markets hoping that the finance minister's budget will provide the push needed to restart the bull run. CNBC TV 18's Navin, Shetty and Areeb Sherwani detail the budget wish list that Dalal Street has put together.
Slowdown in China, US Fed Chief Janet Yellen's rate hikes, ECB Chief Mario Draghi's reluctance to close the doors on quantitative easing, uncertainty in the policy and tax regime in India. These are just a few of the factors behind the 14% decline in the Indian stock market since April last year. This decline has been driven by an exodus of 29,240 crore rupees worth of foreign portfolio investors, even when the domestic institutions continued to be net buyers in the Indian stock markets. But market watchers and experts say this fall could have been avoided, or mitigated at least, if India wasn't plagued by poor capital formation and a lack of depth in the market. They hope Budget 2016 will take steps to correct this lapse, including but not restricted to restoration of rebate under Section 88E against STT paid, simpler KYC process to open demat accounts, tax clarity with respect to income generated from trading in derivatives, and a speedier process for eIPOs. They also ask for incentives that will channel bank savings into the capital markets.
When we talk of ease of doing business, we should have ease of investing. I think that is something which the government needs to tackle, that ease of investing, because we talk about having a high savings rate. We want people to save, and if they are going to save and putting it in bank deposits, and if bank deposits are going to become NPAs, it is very unfair, I would say, for the investors.
Such a move will complement the 4,000 crore rupees that are flowing in via SIP investments in mutual funds. A high cost of compliance is another sore point, seeing as how these costs make up nearly 30% of transaction costs for market players. They also ask that the government step in to rationalize dividend distribution tax and exempt commodities transaction brokerage from tax deducted at source. For increased retail participation, especially in mutual funds, market participants hope the government will initiate regulatory changes and reduce compliance costs.
Under Section 54EC and 54ED, investments in mutual funds should get a tax exemption similar to the exemption given if you invest in NHAI or REC bonds. That's one. Second is, today if you invest in the National Pension Scheme, you get a tax reduction for that investment. A similar exemption or deduction should also be available for investment in mutual funds.
Experts say that even some of these measures will help bring about a shift in India's investment patterns, giving the capital markets greater depth and penetration and adding one more layer of protection from external factors. In Mumbai with Navin, Shetty, Areeb Sherwani.